Hello, I decided to make the first entry as the video and show you trading opportunities based on my approach, based on my trading style. So let's begin with the market profile, which is the most important thing for me for estimating the type of the day. I will switch to this view because there are two different profiles for the day. There is the pre-market, which is Asia plus Europe on the left, and then there's the American sessions, which means regular trading hours. This is regular trading hours, and the chart on the left is since midnight local time until 15:30. The clue what trading will be valid today or what makes sense was the shape of the profile. I like paying attention to the profile shape, which means in this case it was the obvious letter D on market profile TPO, which I currently draw, as well as on the volume profile. It's the D shape as well. This signifies that the market is basically not trending, that we can expect a non-trading day. And in this case, the market likes, especially the America, during the regular trading hours, likes to take out the liquidity. So it's a liquidity sweep at the high of the previous session, which means the overnight session, and the low as well. And you see that it indeed happened here. When I open this chart, this profile, by pressing the G letter, then you see that it indeed happened in this part and in this part. So I will go to the normal chart and show you the trading opportunities. Currently, we don't see levels showing what was the Europe high and Europe low and Asia high and Asia low. There's another thing which I was going to emphasize. It's this one. You see that there was equal low, which is double bottom. And in days like this, it's a great, first of all, target. And in fact, area where you can expect the market to revisit it. It can develop whatever the development is, but it likes to go through this double bottom because there's a lot of liquidity based on, first of all, low of the overnight session and double bottom as well. So when I switch back to normal profile and open it up, then it looks like this. Yeah. And here we can see the areas I talked about. This was the Europe high, this area, and this was the Asia low, this area. And here you see indeed very nice reactions here as well as here. So I will draw lines now so that we can see it on the normal chart. I will use the okay, like so. This is the first line. I will make it global and I will increase the width so that it's well visible, like so. This is the, oh, basically I can work at this, candle chart. Okay, so this is the low of this 30-minute candle. I'm talking about this candle, and it's okay, again, visible better here. I can use this candle as the Europe high. I'm talking about this candle, which is at the candle chart, this one. You see at the bottom that the candle opened at 13:30 local time, and American session is with this background, with this red background. This is the America. So this was outside the America. This is Europe. And this was also outside the America. It was during the Asia. It was the first candle of the day. And when I remove the drawings, you see the situation. So now let's go to the lower time frame. I like using 5-minute chart for the entries. So I do the analysis on a 30-minute chart, which is both here as well as obviously the market profile chart. And this is the situation. You can see actually this is the high of Europe. This candle was from 1350. And if I scroll to the left, you see that there will be the low of the day, which was indeed this opening candle. So just to see it well. And what happened here? The price initially, we have 1530 here, 1530. This is the beginning of the Americanization. And you see that the market opened, spent some time in the rotation, then went up, visited this area, this one, and then went down and visited this line, which is the low of the Asia plus Europe. And now regarding the particular trades, the trades in particular, what I'm going to talk about, the first entry candle was obviously this one, S&P, because it visited the area. This candle visited the area. I'm talking about this one. However, I wait for the confirmation. I wait for the signal. And this candle was my signal candle for two reasons. I have a signal here. This is my indicator, which helps me with consistent identification of the absorptions and other entry signals. But the candle closed also negative here. This is what I pay attention a lot, because this is the low of the candle, this is the high of the candle, so the 50% of the height is here, and the candle closed here. I don't pay any attention to the candle color. It doesn't play any role for me. I need to see a negative candle here, and this is obviously a negative candle because it closed below 50% of its height. We have one part here, and we have the same part here. It's just the estimation, a rough estimation. I'm not measuring it with Fibonacci tool, but it's a negative candle. So this was the entry. And the possible target, I like targeting gaps. This was the gap, fair value gap. This is the first target. And obviously, it was really to expect that the market visits this area because of the double bottom and because of the low of the overnight session. So this was the ultimate target. And as you can see, the price, after some hesitation here, after some rotation, indeed went to the target, straight to the target. And from the opposite side, the other entry opportunity was here at this candle. Why? There are basically three confirmations for this trade to be opened. First of all, as I described here, it's a low of Asia plus Europe. This one. So it revisited this area. Then I have this line here. This is another my indicator, which shows and draws the lines where the high volume nodes and low volume nodes based on a very long time period lies. This is a 500-day high volume node. So it was like a magnet. The price basically went to the area, smashed through. I'm here at the 5-minute chart, by the way, as mentioned before. Price smashed through and printed this candle. This candle has VPOC here, which is okay. There is a confirmation for the absorptions and so on and so on. And besides that, it's an R candle. I mentioned the R.A.I.N trading method for footprint setups, R.A.I.N, and you see that I have basically all the letters at the chart. R.A. Is there any I? R.A. Oh, and there is N. There's no I, but it doesn't matter. So this was the R candle with the footprint confirmations, and the candle closed here above its VPOC, and it's obviously positive candle. Not because of the candle color, because we had a low here, high here, the middle of the candle is approximately here, and the candle closed here. So there are so many confirmations that this trade was really to be expected to be successful. So I will remove all the drawings again and display the idea. The candle closed here, and it was a non-trading day, so I entered the trade here without waiting for any kind of pullback and so on and so on. By the way, there was the R footprint setup, so I could have entered here, and it was basically the very next candle which revisited this area, but I paid more attention to my I call this indicator semaPHorek. It's my indicator, so I pay the most attention to this indicator because it helps me with being consistent in identifying the footprint setup. So I got the 5 strip confirmation here. So entry here with the stop loss here, and again targets. So there are more possibilities for the targets. First of all, gaps. That is the usual target, which I like. So this was the first target. And then during the D days, it said that the price likes to move from one side to another. I'm going to close this just a second. I'm somehow not able to close it. Let's reload the historical data. Okay, I will make it like so. So the idea is that the price moves between value area low and value area high. Obviously, that's the value area low based on market profile. That's the value area low based on the volume profile. That's the value area high based on the market profile, and value area high based on the volume profile. So when I entered the trade here, I targeted the gap and the high volume node on the market profile. But you can see that eventually market even went to the high volume node on, for the value area high on a volume profile. So these are 2 trades. This was the trade number 1 at the close of this, at the close of this candle here. That was the short, and there was the long at the close of this candle. That was the long. Now, as for the fast time frames, I like looking at Renko 4 at S&P 500. It's this chart. It's Renko 4. And you see that the price went to this area, visited, but did not print any semaPHorek confirmation for me. So there was no entry for me. Because of the expected reaction, I did not take this trade at the close of this candle. There was the semaPHorek 6, and I could have gone short, but there was already a reaction at the previous low of the day. So I did not take, obviously, this short, but there was another opportunity here. Oh, well, that's the line. I need to move the line a little. Now I moved it, obviously. Now it's not perfect, but I will improve it afterwards. There's this candle, this Renko with semaPHorek 5, and you see even the strong absorptions in the candle wick. Then there's this candle. This candle is very important because this candle is semaPHorek 6. It's a candle with a lot of volume. That's why the candle is yellow, and it has absorptions, cluster search absorptions at the bottom. There was an opportunity to add to the position here with a stop loss below the rotation because it's an obvious rotation. So this was another possibility. Targeting, let's say, the opposite side of the VWAP, I mean DVAH. This is the DVAH. developing value area high by VWAP. So it was possible to add to the trade at this position. And that's it. 2 trades a day. I mean, for a non-trending day, quite a good result.